What's up, everybody? It's A here, and today we're diving into 3 tax-saving moves every freelancer with an LLC should make before Q4 even begins. If you want to keep more of your hard-earned money and avoid a giant tax bill next April, this is for you. Unlike W-2 employees, we control our tax destiny, and that means we can strategically lower our tax bill if we plan ahead. The U.S. tax code is complicated, but it's packed with opportunities for small business owners, if you act early. Most people wait until the last minute and end up overpaying. Don't be that person. I'll break down exactly what you need to do, step by step, so you're not leaving money on the table. Grab a coffee, take some notes, and let's get into it. First up, maximizing your retirement contributions. This is a cornerstone of financial planning for freelancers and the self-employed. It's not just about saving for the future. It's about strategically reducing your tax burden today. This is the single most powerful way to cut your tax bill and build wealth at the same time. It's a win-win scenario where you're securing your financial future while simultaneously lowering your current tax obligations. Think of it as planting a tree. You benefit from the shade now and enjoy the fruit for years to come. Every dollar you put into a qualified retirement plan is a dollar you can deduct from your business income. This directly lowers your taxable income, meaning you pay less in taxes. It's a straightforward equation. More retirement contributions equal less tax liability. For freelancers, the top options are SEP IRA, offering simplicity and substantial contribution potential, Solo 401k providing flexibility and the opportunity to contribute as both employee and employer, and Simple IRA, a good choice if you anticipate hiring employees in the future. Each plan has its own set of rules and benefits, so understanding the nuances is key. SEP IRA. Easy to set up, making it a popular choice for freelancers who want a straightforward retirement savings solution. The administrative burden is minimal, allowing you to focus on your business. High contribution limits, up to 25% of your net self-employment income, giving you significant tax advantages. This generous limit allows you to shield a substantial portion of your earnings from taxes. Maxing out at $69,000 for 2025. This is a considerable amount that can significantly impact both your retirement savings and your current tax bill. Solo 401k, more flexible, lets you contribute as both employee and employer, offering greater control over your savings strategy. This dual contribution feature can be particularly beneficial for high-income earners. You can often put away more at lower income levels, maximizing your savings potential even if your income fluctuates. This is because you're contributing in 2 capacities, employee and employer, and you get Roth and loan options. The Roth option allows for tax-free withdrawals in retirement, while the loan feature provides access to your funds in case of emergencies. Simple IRA lower limits, but good if you have or plan to hire employees, as it provides a straightforward retirement savings plan for your team. It's a cost-effective way to offer retirement benefits to your employees. Deadline is October 1st, so plan early. This is crucial for setting up a simple IRA for the current year. Don't wait until the last minute to avoid any potential complications. The key: run your numbers. Don't guess, calculate. Understanding your financial situation is the first step towards making informed decisions. Look at your year-to-date profit to get a clear picture of your current financial standing. This will help you estimate your potential contributions. Project Q4, and use an online calculator to see your max contribution. These calculators are invaluable tools for determining how much you can realistically contribute while maximizing your tax benefits. Decide which account fits your situation and set it up before the year ends. Don't procrastinate. The sooner you establish your account, the sooner you can start saving and reducing your tax liability. Don't let your profits sit in a checking account. Put them to work and reduce your tax bill. Idle cash is a missed opportunity. Make your money work for you by investing it in your retirement. Even if you can't max out your contributions, something is always better than nothing. Every dollar counts, and even small contributions can make a significant difference over time due to the power of compounding. This isn't a loophole, it's a built-in benefit for self-employed people. The government encourages retirement savings through these tax-advantaged accounts. Imagine knocking $10,000 or more off your taxable income just by planning ahead. The potential tax savings are substantial and can free up cash flow for other business or personal needs. Open the account, automate your contributions, and thank yourself later. Setting up automatic contributions ensures consistency and makes saving effortless. This is the foundation of smart tax planning for freelancers. It's a proactive approach to managing your finances and securing your future. Don't wait until tax season to wish you'd done this. Avoid the stress and regret by taking action now. Act now, before the year-end rush. Time is of the essence. Take control of your finances and secure your future today. Alright, let's shift gears and dive into a crucial aspect of managing your finances as an LLC owner. We're going to talk about your estimated tax payments. Understanding and managing these payments effectively is key to avoiding surprises and staying on good terms with the IRS. As an LLC owner, you're essentially your own payroll department. You're both the employer and the employee. This means that unlike traditional employees who have taxes automatically withheld from their paychecks, you're responsible for handling this yourself. So you need to pay the IRS throughout the year, making estimated tax payments on a quarterly basis. This covers your income tax and self-employment tax, which includes Social Security and Medicare taxes. If your income changes, and it likely will throughout the year, your estimated payments should too. Don't just set it and forget it. Regularly assess your income, otherwise you risk penalties for underpayment which can eat into your profits. Nobody wants that. Or on the flip side, you risk overpaying and giving the IRS an interest-free loan. While it's great to be ahead, that money could be better used to grow your business or invest in your future. By Q4, the last quarter of the year, you've already made 3 payments towards your estimated taxes. Now's the perfect time for a financial checkup, a mid-course correction to ensure you're on track. Review your income and expenses for the year so far, taking a close look at your profit and loss statement. This will give you a clear picture of where your business stands financially. Then, project your Q4 numbers. Consider any anticipated changes in revenue or expenses for the remainder of the year. Use this information to estimate your total tax bill for the year. There are plenty of online calculators and worksheets available to help you with this process. Subtract what you've already paid in estimated taxes throughout the first 3 quarters. What's left is your estimated Q4 payment. The IRS Safe Harbor rule offers a guideline to avoid penalties. It essentially states that you can avoid penalties if you pay at least 90% of this year's tax liability through estimated payments. Or alternatively, you can meet the safe harbor by paying 100% of last year's tax liability. This can be a simpler option if your income is relatively stable from year to year. There's a slight adjustment to the 100% rule. It becomes 110% if you made over $150,000 in the previous tax year. This review isn't just about taxes, it's about gaining a deeper understanding of your business numbers and making informed decisions. Schedule this financial checkup for early October. This gives you ample time to assess your situation and make any necessary adjustments before the end of the year. Treat it like a meeting with your business's CFO, that's you. Dedicate focused time to analyze your finances and plan accordingly. Use accounting software like QuickBooks or a well-organized spreadsheet to make the math easy and keep track of your income and expenses. Adjust your Q4 payment up if you've made more than expected throughout the year. It's better to overestimate slightly than to underpay. Or, adjust it down if you've had a slower quarter and realize you've likely overpaid in your previous estimated taxes. This simple step of reviewing and adjusting your estimated tax payments can save you hundreds in penalties and a ton of stress down the road. Professionals anticipate problems and proactively address them. Amateurs react to them after they've already occurred. Be a professional, take control of your finances, do the math, and finish the year strong, knowing you've handled your tax obligations responsibly. Your future self, the one who doesn't have to worry about unexpected tax penalties, will definitely thank you for taking the time to manage your estimated taxes effectively. Finally, let's talk about deductions. This is where you get to take control and actively reduce your tax burden. Understanding deductions is crucial for any business owner, freelancer, or self-employed individual. It's not just about saving money, it's about strategically managing your finances to maximize your profitability. Deductions are your best tool for lowering taxable income. They directly reduce the amount of income that is subject to tax, which means more money stays in your pocket. Think of it as a legal way to shrink your tax liability by subtracting eligible expenses from your gross income. The IRS lets you deduct any expense that's ordinary and necessary for your business. Ordinary means that it's a common and accepted expense in your industry. Necessary means that it's helpful and appropriate for your business, even if it's not absolutely essential. This covers a wide range of potential deductions. Every dollar you deduct is a dollar you don't pay tax on. This is a fundamental concept to grasp. The more legitimate deductions you claim, the lower your taxable income becomes, and the less you owe in taxes. It's a direct and powerful way to improve your bottom line. Common deductions. Let's explore some of the most frequently claimed deductions that could apply to your business. Keep in mind that eligibility can vary depending on your specific circumstances and business structure, so always consult with a tax professional for personalized advice. Home office. If you use a portion of your home exclusively and regularly for business, you may be able to deduct expenses related to that space. This includes rent or mortgage interest, utilities, and depreciation. Equipment and software. The cost of computers, printers, software subscriptions, and other equipment used for your business can be deducted. You can either deduct the full cost in the year of purchase, subject to certain limits, or depreciate it over time. Professional services. Fees paid to accountants, lawyers, consultants, and other professionals who provide services to your business are deductible. Education. Expenses for education that maintains or improves your business skills are deductible. This could include courses, workshops, and seminars. Marketing. Costs associated with advertising and promoting your business, such as website development, social media ads, and printed materials, are deductible. Travel. Expenses for business-related travel, including transportation, lodging, and meals, are deductible. There are specific rules and limitations for meal deductions, so be sure to familiarize yourself with them. Insurance. Premiums paid for business insurance policies, such as liability insurance and property insurance, are deductible. And bank fees. Fees charged by your bank for business accounts are deductible. Don't forget, there are many other potential deductions that could apply to your specific business. It's essential to keep thorough records and consult with a tax professional to ensure you're claiming everything you're entitled to. Books, online courses, conferences, and even that new laptop if you need it before year-end. Taking advantage of these deductions requires planning and foresight. The secret is meticulous record keeping. Without proper documentation, you won't be able to substantiate your deductions if you're ever audited. Use a dedicated business bank account and credit card. This simplifies tracking your income and expenses and makes it easier to separate your personal and business finances, and track expenses with accounting software. There are many user-friendly options available that can automate much of the process and generate reports for tax time. Snap photos of receipts. Use a mobile app to scan and store your receipts digitally. This eliminates the need to keep track of paper receipts and makes it easier to find them when you need them. Categorize transactions weekly. Don't wait until the end of the year to sort through your expenses. Set aside time each week to categorize your transactions in your accounting software, and keep everything digital. Store your receipts, invoices, and other financial documents in the cloud so you can access them from anywhere. Before Q4, review your statements line by line. This will help you identify any potential deductions you may have missed throughout the year. Look for missed expenses or things you paid for on a personal card. It's easy to accidentally use a personal card for a business expense, so be sure to review your statements carefully. Make a checklist of deduction categories. This will help you stay organized and ensure you don't overlook any potential deductions. And see if you've captured everything. Go through each category and make sure you've included all relevant expenses. If you're having a profitable year, consider making strategic purchases before December 31st to maximize deductions. This could include upgrading equipment, investing in software, or prepaying for services you'll need in the coming year. This isn't about being cheap, it's about being smart and following the rules. Claiming legitimate deductions is a perfectly legal and ethical way to reduce your tax liability. Good records mean bigger deductions and less stress if you're ever audited. If the IRS ever questions your deductions, you'll be able to provide the documentation they need to support your claims. Take this seriously, it's the hallmark of a well-run business. Managing your finances effectively is a sign that you're taking your business seriously and are committed to its success. Do a deep dive into your expenses now, not in April. The sooner you start reviewing your expenses, the more time you'll have to identify potential deductions and gather the necessary documentation. Capture every deduction you're entitled to. Don't leave any money on the table. Every deduction you claim reduces your tax liability and increases your profitability. Plan any year-end purchases that could lower your tax bill. Consider making strategic investments in your business before the end of the year to take advantage of potential deductions. The more diligent you are, the more you save. Taking the time to track your expenses, categorize your transactions, and review your statements will pay off in the form of lower taxes and increased profits. Don't leave money on the table. Maximize your deductions by being organized, proactive, and informed. Consult with a tax professional to ensure you're taking advantage of all the deductions you're entitled to. There you have it. 3 moves to lower your tax bill and run your freelance business like a pro. Max out your retirement contributions, adjust your estimated taxes, and deduct every legitimate expense. Be proactive, not reactive. A little planning now saves you big later. I'm not a CPA, this is for informational purposes only. Always consult a qualified tax professional for advice tailored to you. Their fee is often a deductible expense and can save you more than it costs. If you found value here, hit like, subscribe, and let me know in the comments which tip you'll use first. Thanks for watching. See you in the next video.